Now, thank you for all coming to this webinar this morning. I know that you've got other options to, ways to spend your time, especially in summer. We're not in school, so there's probably a few other things you could be doing. So we really appreciate you taking the time to log in. And I was chatting with Paul a few minutes ago, and this is going to be a fun and interesting session. So yeah, now just to make you aware that we are recording this webinar. It's going to be used for educational purposes later on. So we are recording it. Paul would like this session to be more conversational, and that's what I would like too. So you are all muted at the moment, but if you have a question, feel free to ask a question at any time that you might have for Paul. Pop it in the chat. So if you write your question in the chat, or just write even your name in the chat, then I can call on you to ask your question in person. You can turn on your video and I'll unmute you so that you can, directly engage with Paul about your question. I'm just using the chat so that I can get an order of who had their hand up first. So now we don't want to hear from me and me talking for the whole hour. So to introduce our guest, Paul Ehlinger, and again, thank you to those of you who have worked with Paul or at Mizzou with Paul that have stopped by to take part in this session. You can certainly ask questions as well. Now, Paul, I'm going directly off Paul's page here. Paul works for Allos Ventures. You can correct my pronunciation of that eventually. So Paul has a BS from University of Missouri, woohoo, M-I-Z, right? And that's why we have him here. He has an MS from University of California. He started out, before he got into this venture capital world, he was a medical device engineer, and he was in R&D, and he worked on basically inventions to do with the brain, right? The treatment of brain aneurysms, which is super cool. And it says here, finding corporate life wasn't for him. Yep, I hear you, Paul. Then he started into the world of startups, and then now he's going to tell you more about his journey and how he ended up in venture capital. Now, he has a business book worth reading recommendation on his page, and I completely endorse this. Not really a business book, but still a great book. Zen and the Art of Motorcycle Maintenance. You students, if you're looking for a book to read over summer or anytime, Zen and the Art of Motorcycle Maintenance is an amazing book that teaches you more than you would imagine, I guess, right? And you've lived in 8 cities in the last 10 years, Paul. So you're pretty good at picking up and moving now.
Supposedly, yeah. I think I get worse and worse as it goes on. I just keep accumulating things.
So just to reiterate, for those of you who are just joining just now, if you have a question, you can ask a question anytime. Pop it in the chat. I will keep an eye on the chat. I have you muted, but once you put your question in the chat, then I will, call on you, and you can turn your video on and ask your question in person to Paul. So first, before we get started though, Paul, what do you miss most about Columbia, which is probably something we're all missing right now, those of us who live in Columbia, considering we can't get out?
Yeah, I miss just going downtown with friends, right? Going out for a few drinks, getting some food. Definitely the best times. I think I see a couple people on here that I used to do that with. And so just walking around Columbia, right? It's a great city, great place to be. And I'm sure it's a little harder to go enjoy all those things right now with COVID.
Right, yeah. And Shakespeare's or Butcher's?
Probably Shakespeare's, honestly. I don't know. it's the symbol, right? More so than the taste, I would imagine.
Yeah, yeah, right. Okay, so Paul, tell us about how your time at Mizzou. Talk about your time as a student, and we can go from there.
Yeah, I can go through the history, I guess. So
Yeah.
I'm at Mizzou. Started off in biological engineering. My advisor's on here with Dr. Borgelt, and stayed true to that. And so while I was at Mizzou, was a part of Mizzou Engineering Student Council. Was eventually a co-president of St. Patrick's Board Engineers Club. And so did a lot in that space, right? Staying within engineering. I did undergraduate research my whole time at Mizzou. So I was initially with Dr. Viator in the biological engineering department, and then ended up with Dr. Lakshmi Pulakat, who is actually in the Department of Internal Medicine over at the VA hospital, actually in Columbia there. Following Mizzou, just was right along the path, right? And so got accepted to a PhD at the University of California, Riverside. And about 9 months into that, I accepted an internship with Medtronic. And that was when I very quickly realized I didn't want to do academic research anymore. And so ended up leaving with a master's degree and joining on with Medtronic on their neurovascular design team. And so I was working on their next generation of a flow diverting stent to treat brain aneurysms. I was there for a while, and again, kind of made another realization that big corporate life wasn't for me. It was I remember distinctly, there was like a Tuesday where I was sitting there waiting for documents to get signed by the quality control department. And I was just like, am I going to do this for the next 40 years, just waiting for people to sign documents? And so that was about the same time. We had about 5 people left Medtronic and went and started a company called biomedical. And so I was one of the lead engineers there. And we had developed a novel neurovascular coil for the treatment of brain aneurysms. And so we took that through, got FDA approval, CE mark status, and eventually signed a distributor partnership with a company out of Germany called Phoenix. And so really successful. That was a good time. And about that time, my then girlfriend, now wife, actually got married like a month ago throughout all of this.
Congratulations.
Thank you. Yeah. We moved to Kentucky. And while I was there, I was like having a bit of a crisis. I was like, do I want to keep doing this? I had gotten a taste for startups, right? And so initially I was thinking, do I want to start a company? Do I want to just go back into med device? And then I came across a firm called the Kentucky Enterprise Fund. And so they are actually the state of Kentucky's early stage venture capital fund. So I ended up joining on with them. And I remember making that transition. It was a lot of imposter syndrome. I think for the first 2 months, I spent, just reading venture capital books and also just making as many phone calls as I could. Because I had been exposed to it with Wallaby and seen the other side, the business side, but hadn't really, been intimately involved with the financials or anything like that. And so to move along, I guess, ended up managing that fund for a little bit, led about 8 investments out of it. And then about 7 months ago, joined on with Allos Ventures as an investor. And so we just closed a $52 million fund, and we invest at the early stage kind of across the region. So we kind of call it the greater Midwest, kind of Kansas, Colorado, over to Pittsburgh, and Chicago down to Tennessee. And so we do early seed and Series A investing.
All right.
That's a quick one too. That's my life in a 2 minutes there, I guess.
Yeah. That's a whistle-stop tour. So this imposter syndrome thing, so it reminded me of the case of a student over in Kefner who told me he had a business proposal, was actually for medical marijuana. So in the state of Missouri to get a license. And he went up against some venture capitalists and they asked him all these questions that he couldn't answer. And he said he felt so stupid that he went home and sat in his basement for hundreds of hours reading all the books he could, because he said, I am never going to go through that again. So you relate to that story?
Yeah, no, definitely. I would say there's just this verbiage kind of bridge barrier that you have to get over, right? And it's understanding just the lingo and how they talk about a company. I think when you're coming from like the design and the engineering side, all you're thinking about is product and building and shipping the thing. And in your mind, you're like, if I can build a great product, this will be a great business. And it's just like VC looks at it almost the entirely opposite way, right? Is it a fantastic team and an awesome market opportunity? And if you have both of those things, then the product will come along sooner or later. And so it's kind of like once you learn the format of how they think, and then also just how they communicate, it gets a lot easier to sit at the table and to understand it better.
So then for our students then, so, you come to Mizzou or any university and you pick your degree and you specialize in that degree.
Yeah.
And whereas, so you've got your engineering background, your degree, but you've ended up in this world of business.
Right.
So, and like you said, going through this imposter syndrome. So do you have any tips for current students to kind of get in front of that? Like,
yeah, definitely. I did it a little bit. I wish I would have done it more. I took a few courses that were outside of kind of core biological engineering curriculum. So I took a class that was an entrepreneurial based class. I remember like writing a business plan in that class. And I think it was to like franchise a Dunkin' Donuts or something was our business plan that my group came up with. But like that one spurred a lot of inspiration and just like understanding that there is this whole world of just the financial business side, right? Because I think inherently engineering and business is kind of at odds with each other, right? But then also I took a course in like masterpieces of Western music or something like that. So I think it's a matter of really taking advantage of the little microcosm of Earth that you have on a university campus, right? You've got experts from all these different fields that are at your disposal. And so while you're there, take the extra courses that seem interesting outside of your degree. Join the groups that are interesting outside of your degree and just try to get involved in all the different areas, because at the end of the day, I thought I was going to be an engineer for the rest of my life, right? Like I totally built everything around that. And I think as a lot of us now know in life, you just don't end up doing what you think you're going to set out to do. And so finding all those potential avenues earlier is something I would have explored.
Right. Yeah. Going outside your degree and learning, the course in, what was it? Western music?
I took a masterpieces of Western music course and it was like a really good time. I took it as a senior because I needed to fill some credits and it was like a freshman level course, but I thoroughly enjoyed it.
Masterpieces of Western music.
I don't know if it's still there, but you should do it if it's there.
Yeah, I'm going to look it up. Yeah, you students, we might look into this, right? Okay. So, so you said, so you're in this company and then you go into the startup world. And so you were one of the first employees at Wallaby, or you were a founder?
Wasn't a founder. So we had a CTO and a CEO, and then I was, I think, like the third hire or something like that. So they basically, the two guys had the idea, and then we left and the engineering team left. And so we actually, it was kind of an interesting setup. So we had our operations and manufacturing over in Shanghai, China, and our R&D and design work was happening in Laguna Hills, California. And so I was a part of that initial Laguna Hills team, to the extent of like I literally helped build the floor that we put our lab in. I was building our quality control system, responsible for the design of the delivery system of the device and stuff like that. So very early, held some equity and got into it pretty soon.
Right. So that world of startup is being a jack of all trades, right? So, you've got your engineering, you've invented this device, but there you are, just rolling up your sleeves and doing whatever needs doing. Right?
Yeah, I think doing startups earlier in your career is like a really interesting option for students in the sense of you do everything, right? Even if you come out and you have a marketing degree, you go and do marketing for a startup, you're going to do a lot more than marketing, right? Especially if that company is less than 20, 30 people. So it gives you an opportunity to get more responsibility than you would normally get. So if you go into a big corporation, you kind of get pigeonholed into being this novice first year, worker. Whereas if you're in a startup, it's like, hey, there's 6 of us. Like you've got to do a lot of things now. So you get a broad list of things, but then also just a lot more responsibility within each of those kind of units. So it's a great experience builder early on.
Right. So before we get on to the subject of venture capital, which is important and the main reason why you're here, but so on this call, on this webinar, and those of you who are late joining, again, if you have any questions for Paul, just put them in the chat and I'll pick them up from there. But so there are students on this call who are currently in this course that I'm teaching, in which 4 weeks ago, they had no idea for a business. They signed up for entrepreneurship. I don't think they realized that they were going to have to start a business. So 4 weeks ago, no idea. Week 5, this week, they are all launching businesses.
That's exciting.
So it's been, a big 4 weeks for them. But this week, it's scary, right? Launching your business is scary. And there's a bit of that imposter syndrome there of going, I'm putting myself out there. I'm going to do some marketing. Why would anyone buy this from me? Why would anyone listen to me, etc.? Do you have any tips for that, having gone through it yourself?
Yeah, I think you just have to be like utterly passionate about the problem you're solving, because people like me are I get paid to find holes in your business, basically, right? And then help you maximize on the upside once we invest. And so everyone else is going to do the same thing. All of your competitors are going to poke holes in you. Your customers are going to find holes in your thing. And so you're going to get beat down a lot. And there's this whole thing about like the entrepreneurial mindset, and the journey is very much this, right? And so the only thing that can really overcome that is just being very passionate about what you're doing, because that's like what gets you up the next day in the morning and say like, sure, they like crapped all over me, but like I can keep building this thing. And so that's something we honestly really look for in our founding teams when we look to invest is, like, why do they love this problem that they're trying to solve? And why can they uniquely solve that problem, right? Because we need them to just live and breathe this thing.
Absolutely. And so then you talked about this earlier about how, startup is about the product, but when in your business, venture capital now, you're looking for the team. So you invest in the team. So we talk about this in our courses when we teach our entrepreneurial students is that, you have to be able to present yourself authentically and be passionate about your idea, because the people are investing in you yourself. Do you have the ability to get this done? So do you ever see, have you ever come across instances where somebody is is there such a thing as being too passionate?
Yeah, so it's interesting. So I see that a lot from people like myself, right? And so like if you're an engineer, have a scientific background, you get a lot of people who are like so just about this one technology, right? And they kind of miss the broader worldview about how they can kind of effectively deliver that technology to the market. And so you end up, and it happens a lot more if you have kind of solo founders to where they're just like, they're almost like missionaries out for a cause, right? Where it's like, I think this is the one way to do it. This is how I'm going to do it. And that's one of the reasons we oftentimes look for like multi-partner founding teams, right? Because you want people who have different perspectives coming together so that you don't get that kind of single perspective constantly driving forward nature of it, because there is a lot of twists and turns and you're like going to be wrong 99% of the time. And so it's a matter of, iterating enough to find that 1% that it's going well.
Yeah, that's right. I mean, if you can't convince at least 2 other people that your idea is good and they should jump on board, you're not going to be able to invest this team of venture capitalists, right?
Right.
So let's talk about the venture capitalist journey. So again, we have these students who have started their businesses, and so when does venture capital make sense for a startup? And when doesn't it?
Yeah, so, first and foremost, I think the hardest thing to understand when you're coming from the startup side is that everyone kind of has their thesis, right? And so the very first kind of thing is just like, you may just not be a fit for a certain fund, right? The second thing to consider is we are looking for a 5 to 10x return on our money in a 5 to 7 year time frame, right? And so if you are very early in your company, it gets really hard to prove that you can hit those return numbers in 5 to 7 years, right? Because you just don't really have growth, you don't really have these things. And so oftentimes if we find a company that's a little too early for us, the solution, and they definitely need funding, the solution is to find kind of more creative ways to fund this business, right? Some of those can be SBIR grants, STTR grants. So the federal government does a lot of kind of early non-dilutive funding. And there's a lot of grants like that. Another way is to look for, I think the early rounds are called like friends, family, and fools, right? The people you can get to just believe in you and your idea on a napkin. You can find those people and they can help you get that initial thing. But the one thing we always press is just like customers. The best way to fund your business is revenue. And so, that gives you total control. You don't have to take my money, which, if you can build a company without VC money, I always tell people to do that, right? And so to me, it's, finding the unique ways to get non-dilutive funding, but then building that MVP that truly is a sellable product that someone will pay you $1 for, right? Because that's what I'm going to judge you on, and that's what's going to fund your success as you grow. So that's kind of what we look at when it's a bit too early for us.
Yeah. So we have a question from Basil. Now, sorry, Truman. Truman, I'm going to unmute you. And if you would like to turn your camera on, and you can ask your question. Hi, Truman. Good morning.
Hey, Truman.
Hi, how's it going? Yeah, so my question is, at your venture capital firm, are your investments bounded by a specific industry, or are they industry agnostic?
Yeah, good question. So we are fairly industry agnostic, kind of with a caveat. So we primarily invest in two business models. So those are B2B SaaS companies. So those are recurring, like monthly subscription recurring revenue between the businesses. And then we also invest in tech-enabled services business models. So that's a company that may have a product or something along the lines, but then they also have technology to amplify that. We are industry agnostic with the caveat again of we stay away from heavily capital intensive industries. And so like we're not going to invest in the next 3D printer, or we're not going to invest in the next cancer drug, right? Those are businesses that we see take 10 to 15 years to generate a return, and they require kind of 10x the capital to get to that point. So we generally stick away from that. But then when you look at the investment team of Allos, we all have very kind of different backgrounds, and so it lends itself to we all have our interest areas where we like to invest, and that's where we see a lot of interest across industries.
Does that answer your question?
Yeah, thank you.
For sure.
We have another question from Ed Gee. I'm sorry, Ed, if I have butchered your last name, Ed Gee. And Ed, so Ed's microphone is out of battery, so I'm asking it for him. But his startup recently got into the finalist interview round for Alchemist Accelerator. Congratulations, Ed. That's a good job. Awesome. He's interviewing tomorrow. So, Paul, do you have any advice for him for tomorrow, or have you worked with Alchemist before?
I haven't specifically worked with Alchemist Accelerator before, but worked with several of them, helped a couple get off the ground in Louisville. I think when you're at an accelerator, one of the things you're trying to sell is that they're a good fit for you. So accelerators oftentimes come with this plethora of resources and capabilities, right? And so just show that when they apply those resources to you, it'll amplify your business, right? And so, like Techstars, the big resource that Techstars has is their network. And so what you want to say when you go through a Techstars accelerator is, as we're building this, the thing we need is just access to these investors over here, but also these markets internationally that you have access to. And so finding ways, and I think this is the same thing if you're going to find venture funding, right? Just always find that specific fit. And so whatever that accelerator offers your business, just show how that will amplify your business. And so, because, their time is like an investment. So they're going to invest in an hour of their time, show them that it builds $2 of capital or value. So just how you can amplify their resources is how I would suggest to go about it.
So Ed, does that answer your question? You can write it in the chat if you have any.
Yeah, hopefully.
But Paul, just to back up a little bit for the students, can you just go over what an accelerator is and what their purpose is and their relevance to a startup? Is that something that when you graduate from college and you have this side hustle that you've been working on? Yeah. So an accelerator is just one way for early stage growth of a company, right? And so there's a lot of different ones. The famous ones are kind of Techstars, 500 startups, things of those nature. And what they do is it's an accelerated kind of business course, right? And I think it's, the primary purpose is oftentimes founders aren't business people. Like they just don't know financials. Like I'm definitely by no means an accountant. Like I'm not going to go in and do all that work, right? And so what it is, it's like you've got this great idea. You're starting to build this company. You're very early, right? A lot of accelerators, you wouldn't even have raised outside capital by the point you go into it. And what they provide is here's what a term sheet is, all this education, right? Like here's how a VC is going to, want you to pitch to them. Here's all these things. Here's go-to-market strategy. And they surround you with this pool of advisors and mentors so that, sure, you don't have that expertise, but you can find those answers to the tougher financial questions or business growth questions.
And, you know, a lot of times they'll occasionally do an equity investment, right? So they'll say, we put $100,000 into every company that comes through and we take 4% or something like that. But one of their strengths is they're not going to write a big check, but they'll connect you to a bunch of other investors. And so the culmination of a lot of accelerators is a pitch day or a demo day. And so they basically try to bring in all the investors in their network into a room. The startups all get up there and then you pitch. And so one really good strategy for companies to use accelerators is to, like 6 months before they want to raise that first round, is go through the accelerator so that the end of the accelerator aligns with your intentions to like kind of make that first institutional capital raise.
Cool. And Ed says that answers the question. So yeah, he's very happy with that advice. So for students then, another thing is, what should they look out for or be careful of when somebody, whether it's friends, family, or fools, or somebody else, a friend of a friend, offers to invest in their business or says they would like to invest in their business? What are the because, you know, as a startup entrepreneur, it's your first thing. It makes you feel good, right? Like, oh, they want to invest in my idea. Right. And, you know, there's the danger that you might hand over a little bit too much control, or you're all, you know, everyone's getting on good. You don't put in those agreements right away because you think you're going to be friends forever. That kind of thing.
Yeah, I would say, especially with very early investors, it's a marriage, right? And it's a marriage at like the most risky of times. So like first money in has like a 95% chance of getting nothing back, just because of the nature of how startups work. And so you have to be very trusting of this person, and you know, you've got to be confident that they'll be there for you on the ups and the downs, right? You want someone to keep you in check, but you don't want someone to beat you down when you already know something's going poorly. You know, and then in terms of like the I don't want to give up too much argument, right? I think the common phrase is just like, do you want 100% of nothing or 50% of something, right? And so don't be afraid of giving it up if you feel like you've built a machine that just needs a little fuel to like make it bigger, right? Because that's what outside capital is. It's just kind of fuel. And so, you know, in terms of getting a fair kind of deal, a lot of that is, it's just like what the market will bear. And so do your research, right? Talk to other founders who are a few stages in front of you and say, what did you get? Like, what terms did you get here? What terms did you get there? And then, you know, it's just a matter of if you can make a good enough argument to say that you deserve better terms than that. But that really is kind of a free market aspect of venture capital, is finding those terms together.
Cool. Thank you. So Jackie, I'm gonna unmute you, Jackie, or if you could unmute yourself. So Jackie Rasmussen has a question. She's at the University of Missouri and a fellow Kiwi, but her accent's, she's been here a bit longer, so her accent's a bit different to mine. Good morning, Jackie.
Good morning. Hey, so Paul, I'm just kind of wondering or curious, just as a kind of a baseline, and I know this may vary between VC companies, but what typical equity position are VCs looking for? Because I think there is, just as we were talking about that internal conflict amongst entrepreneurs. You know, they want to own and control their own thing. Yep. And I think that sometimes is, whether it's real or not, that, you know, with VC financing, that you're giving away the lion's share of control of your company. Yep. And so I guess maybe you can talk about just the initial question of kind of what is that, you know, kind of, is there a number, and then what are the kind of the pros and cons? I know you money in hand to be able to grow your business and have resources and support, but the potential downside on what, you know, maybe from the entrepreneur's perspective that you might need to keep in mind.
Yeah, for sure. So I can speak specifically to Allos and then kind of broaden it up to the industry. So with Allos, we make two different types of investments. So we'll invest at the Series Seed and the Series A levels. And so that's just earlier or a little later. With our Series A investments, we target double digits. So our idea is kind of 10, 11, 12%. We're a little flexible on that. I know there's like a lot of VCs that are just like firm. If we don't get 15% of your company, we don't do the deal. We try to be a little more founder friendly than that. And then at the earliest of stages, we're not really looking at ownership percentage. So for us, when we do a seed stage investment, the intent is that 12 to 18 months down the line, the company will be in a position to take a bigger check from us. And that's where we'll get our ownership percentage in that company. In terms of an industry in general, right, I think one of the ways to look at it is whenever you go out for an outside funding round, you can expect your company to be diluted by 15 to 25% kind of for each round, right? And obviously, if you get into like unicorn status or anything like that, where you're raising $300 million rounds, like things change. But you can expect kind of those first, kind of 2-3 rounds to round out about to that. In terms of pros and cons, right? I think the obvious pro is just working capital. Like cash is hard to come by in a startup, and any kind of free cash flow you have to then build your business is really great. The bigger cons that come from that, one of them, and I kind of mentioned this before, is if the machine isn't ready for fuel, then you waste a lot of money, you waste ownership, and you kind of kill the momentum. So something super important to startups is maintaining momentum, because you don't want to have to go out to a next round of investors and not be able to raise at a higher valuation. And it's called like a flat round or a dead round. And so you basically want to be able to you need to make sure that your company is in a position to use outside capital to create value. And so that's one of the bigger concerns. As you start getting more investment, it starts turning into a lack of control. And so, when you start taking Series A money, you start putting together a formal board of directors. And those oftentimes, the first boards of directors oftentimes look like kind of 2 people from the startup, the lead investor from the Series Seed, a lead investor from the Series A, and then an outside independent advisor. And at that point, you've kind of lost the control, right? Your team only has 40%. The thing we always argue is, if the team isn't making unanimous decisions, like you guys shouldn't have paired up anyway. Everyone should be building towards the same goal. So there's kind of, the lack of control, which shouldn't be an issue if you guys are kind of in tandem and working together. And then there's just the potential for taking too much money or money too early to where you can't create efficient value out of it.
Cool. So just a quick word again for the students. So there's no such thing as a stupid question, right? So you can it doesn't have to be like a smart question about venture capital or anything. Like I was once at a business presentation with the Prime Minister of New Zealand. And my question for the Prime Minister, everybody else was asking questions about interest rates and policy and whatever. And my question was, hey, I just want to know, what time do you get up in the morning? Because, this theory about, successful people are early risers or whatever. And, he answered the question. And so many people came up to me afterwards saying, what a good question that was, because the audience was kind of like, okay, policy, we can read about this in the paper, but getting to know that person as a person, right? So you are legitimately allowed to ask, what time do you get up in the morning? What time do you get up in the morning, Paul?
So I hate waking up early, so I guess I'm not successful. So I think my alarm goes off at 7:30 and I end up getting out of bed at like 8:30 or 8:45. But I stay up late, so I stay up until like 1:30, and that's when I kind of get my big work done from like 11 to 1. And then, when I wake up and I'm just kind of in bed, I do a lot of my reading. So like venture capital is like a ton of reading is something they don't tell you. And so just reading about all the other deals that are happening, reading about what's happening in all the industries, especially when we're fairly agnostic with our focus, it requires a lot of that. So I would say, I definitely don't wake up as early as I'd like. And I'm not a morning person by any means.
Yeah, well, you're one or the other, right? So I'm up
Exactly.
at 5 a.m., but, past 9 o'clock, don't ask me anything that requires thinking.
Right.
So Ed has another question. Should an early stage startup raise in safe note, convertible note, or direct equity?
Yeah, so I mean, that's a kind of a common question. A lot of the reasons why really early stage companies, especially pre-revenue companies, raise on a safe or convertible note is because the investors there aren't kind of institutional enough to be able to set a valuation, right? And so and you just don't have revenue, you don't have metrics, so there's like nothing to base that valuation around. And so if you're pre-revenue and very early, you use a safe or a convertible note in that it's saying, hey, we don't know what to price this at right now. We think it'll be above this number, and that's the cap. that they put on those terms. And so, a common note is like $1 million on a $3 million safe, and you put like a $5 million cap. So that's basically saying we're going to invest $1 million. It's going to get us a discounted amount of shares once we cross that cap. And so that then comes in with the next round of investing. And so, I think it can be good for the startup in the sense of you don't want to get priced too soon. So like if I were to look at a company that had no revenue, started 8 months ago, and has like one customer, I'm going to price that at like $1 million valuation, right? And that's just like dramatically low and probably not fair, but it's because the risk I'm taking there is so extreme that I need my money to be able to make up for it, right? And so to me, that's why the safes ended up happening, is that it allows you to get money faster. There's no negotiation on terms, and you don't have to deal with an outside source trying to value something that's intrinsically difficult to value. I used a lot of big words in there. I don't know if that was too like technical.
So I'm very impressed with an engineer, and now you have Alex. Thanks for your question. We'll get to in a quick sec. So you're an engineer, and now you have all this. You can use this business terminology, venture capital terminology. So that was a lot of self-taught. Like you went out and just.
Yeah. So the very first book I read, and the one I still refer to, is there's a book called How to Be Smarter Than Your VC Lawyer. I think it's called like Venture Deals by Brad Feld. So Brad Feld's like a godfather of the startup community industry or whatever. But this book literally walks through a term sheet and just in layman's terms explains all of the different aspects of a financing within a business. And so that one is clutch. That's one I still go back to. And then the rest are just business building books, right? And learning some of those things around marketing, sales, and all that good stuff. But I go back to that book all the time. Right.
So this question that Alex has actually, Alex, if you can unmute yourself and you can ask Paul your question directly if you like. It goes along with what I was going to ask next.
Yeah, sorry, I'm kind of in between a department meeting in this right now, so I'll be quick. But yeah, so it's like more of a life-based question, because obviously you've been through 8 different cities in 5 years. You've been part of a PhD program and a few different gigs along the way. Like what was the typical transition between those? Was there always an idea of what you want to do next, or was it just kind of you're tired of this sort of lifestyle, so you took a break from it and then found your way after that? Like where did you, like, how did you get from point A to point B? Because there's a lot of in-between steps to get there.
Yeah, good question.
Yeah.
So I would say it kind of varies on each one, right? And it was a little bit more of a learning I didn't like the situation I was in, and then trying to figure out what the next thing was, right? And so when I got to the PhD, it was just being exposed to Medtronic and kind of the cool, like having funding, being able to build immediate things that'll change the world. Is that what pulled me out of the PhD? And then being at Medtronic, I hated the bureaucracy. So that pushed me towards startups. And then the hardest ones have been since then. Since I made the transition to startups, it was really difficult in the sense of like now I felt like I could do anything, right? Like I'm just like, oh, I could start any business in the world right now. And so you get this feeling that you can own whatever you're doing. So why would I ever want to work for somebody again? And so I know when I moved to Kentucky, that was a really difficult time for me trying to decide if I wanted to do work for somebody again. And I kind of looked at joining on with the Kentucky Enterprise Fund as like getting my MBA in real life. And so it's just like, I thought about going back to school, and then I was just like, man, I really don't want to go back to school. And so like, what can I do to get that outside knowledge, in a real world kind of feet on fire situation? And then right before I joined Allos, I was actually contemplating starting another company in kind of the diagnostic space, and went pretty far down that pipeline. And it came down to lifestyle. Like I had realized that that's a 100-hour-a-week like founder position. And now I work 60 hours a week, right? But it's, I've got a team with me. I know I'm not solely responsible. It's just a mental state type of thing. And so I decided to take a few more years of not being sole founder on something. So it's a little bit of just like where I'm at, and then a lot of bit of not really knowing exactly what's going to happen next and just going for it.
Yeah, it definitely has that mindset of like leaps and bounds of just kind of taking that step, even though you don't know where it's going to take you, but just kind of going for it.
Yeah, and I think I kind of realized that in Medtronic. Like I realized I could be an engineer at Medtronic for the next 40 years. I could end up making $175,000. I could be very comfortable. but there like wasn't enough risk. And I realized I like risk, I guess. And so there's kind of that mindset that you have to accept once you jump into startups and venture capital, is that every day is going to be different and you have no idea what it's going to lead to.
All right, last follow-up. But would you say it's been a discovery of what you have found is what you've not liked and moving on from it, or trying to discover what you do like and following that?
So early in my career, it was definitely learning what I didn't like. And so that's one of the reasons why I think students should try to take a broader set of courses, right? Because it's like, maybe you go take a linguistics course and you're like, wow, I hate math and linguistics is the best thing ever. And like myself, I actually didn't take any internships during undergrad. I did all undergraduate research at Mizzou. And so I didn't even have the opportunity to explore different industries. And so to me, it's like early on, try different things because you have no idea which career you like. And now I feel like I'm honing in on what I like to do. And so it gets a little more specific to like forward looking.
Awesome. Appreciate it, Paul.
Good seeing you, Spiva.
That's
Good
cool.
seeing
Yeah.
you.
Great question, Alex. And yeah, I the same. I just, whatever you're curious about, and sometimes it's not about the money, right? When you're young, you think all you want to do is make $1 million. Well, $1 million isn't that much now. But then you end up doing something that pays less than what you could do in a different, another option, but
Yeah.
it's just much more rewarding and fulfilling. And
I took a big pay cut when I joined the Kentucky Enterprise Fund just to learn how to do that. So yeah, definitely. Let's take Paula's question. I love Paula's question.
Yeah. Let's, Paula, do you want to unmute yourself? And this is a great question. Thank you for asking this, Paula.
Sure. I'm relatively new to the startup world with my cousin who's a student in the vet school at University of Missouri. And it is, in every industry, there's not enough representation of women, people of color, kind of interdisciplinary diversity too. So
yeah,
I've been through an MBA program and was one of the few women still in that program. So it's a systemic issue. We're talking a lot about systems these days in the pandemic. So wanted to get your read.
Yeah. So it's actually funny. So when I joined into venture capital in Kentucky, after a month, I was like, man, every board meeting I'm sitting in on is like 55 to 60-year-old white men who talk about their grandchildren and their golf game. And I was like, holy crap, this is boring. Like, is this what life is? And so I thought it was like this Southern problem. I thought it was just like Kentucky's some kind of backwater state. That's it. Did the research, find out it's not that, it's a systemic issue. And so that's one of the things I'm pretty passionate about. And so from there, I went on and I built a thing called the Impact Investor Landscape that we launched at the Angel Capital Association, which is like the national organization for all the angel investment groups. And so basically that is just finding those, it helps investors and it helps startups find those investors that are investing via a gender lens or an ethnicity lens. I helped launch the Wild Accelerator in Louisville. So it's a female-led accelerator. So I think there's a lot of work to be done. And without violating SEC regulations, we're putting more capital together right now, actually, to address this a little more specifically. So it's something I think is a huge problem. It's a huge missed opportunity. There's like the financial arbitrage opportunity of why isn't there a Black woman-led unicorn startup? And to me, it's because they haven't had the opportunity, and I want to provide that opportunity and kind of leverage the privilege I have. And so it's something I'm very passionate about, something we're actively working on. And so hopefully I can give more news about that in the coming months.
Awesome.
That would be awesome, Paul. Actually, it would be great to do a session in the future. And thanks, Paula, for asking that question.
Yeah, thank you.
It'd be great to do a future session talking to some of the women that have, applied to this new fund.
Yep.
And been successful and how they did it. That would be fantastic for us to do at Mizzou.
Yeah, I mean, it's definitely far more difficult, and it's totally because of I experience it just because I don't have a finance background. Like when you look at venture capital, I think it's something like 80% of VCs went to 3 MBA programs. It's like Stanford, Booth, and Harvard. And so I can only imagine, like the thing I always reference when I was in Louisville, like West Louisville is the lower socioeconomic status area of Louisville. And I'm like, if I'm a Black woman from West Louisville, how the hell do I get venture capital? And so to me, it's about just getting people plugged into the networks earlier and more frequently. And and then just having capital ready to go for it, right? And so that's what we're working on.
Yeah. Yeah, we've been, I was in a discussion yesterday talking about how, was it the steam engine, I think? The government called for ideas back in the day, and the winning idea came from a farmer in the backwoods of nowhere. It wasn't even a scientist or an inventor. Right. So innovation and ideas exist. There's no geography, right, to good ideas, right?
And that's something we want to look at as well, is that people coming from different backgrounds and different perspectives represent market niches that haven't been explored by like the predominantly white male ecosystem.
Absolutely.
And so there's a lot of markets that are billion-dollar opportunities for people to go out there and invest in and build companies in. And I think, in the next 10 years, you'll start seeing those types of founders running these massive organizations. So I'm excited for it. It's been a shitty past, but I think the future is much brighter.
I hope so. Yeah, absolutely. So yeah, more people of color and women entrepreneurs, showcasing them and telling their stories to inspire others. So Austin says, thanks. Austin, he put in the chat that the Venture Deals book that Paul, you talked about, it's at the MU library. You can get it for free. It's online. So thanks, Austin.
There you go. It's a dry read, but it's really good knowledge.
Right. Yeah, absolutely. Now, Ed, he says, last question, hopefully, in brackets. How should a startup led by college students present themselves as a strong team to VCs and investors when compared to other founding teams of older and more experienced professionals? Good question.
Yes, that's super difficult and gets into a little bit of the aspect that we talked about of like, when is VC ready for you? Yeah. So there's a lot of funds that just don't invest in first-time founders because they believe that they just represent this too large of a risk for their money. But then you do have funds specifically. So I think of like First Round Capital, like their whole thing is that we are going to invest in that first round. We're going to take chances on people. And so it's a matter of really breaking down and looking into, if you're looking for venture capital money, finding the VCs whose portfolios represent some of that risk. Like, does that team accept kind of personnel risk as one of their things? Outside of that, that's where you start getting into accelerator programs, and non-dilutive funding is very effective to kind of prove some value there, right? It's showing, I get it, we're a first-time team, we're a first-time founder, here's what we're doing. The other thing I often suggest is trying to get meetings as early as possible. So go to a VC and say, hey, I'm not pitching you for money right now. I'm showing you my business. They'll give you a bunch of great feedback. They'll push you to connections. But then what it gives them is kind of a set of goalposts. So if you talk to me and you say, I'm not raising money, here's where I'm going to be in 6 months. And then you come back to me 6 months from now and you've hit that goal or exceeded it, I can trust you, right? Because again, this is a marriage. And so especially when you're a first-time founder, setting goalposts early and showing progress early is one of the good ways to go about getting venture capital money. But then again, that's what angel groups and angel investors are really good for, is that they invest at that earliest of stage, regardless of your experience.
So going back to, you talked about entrepreneurship and, you've got to be able to solve a problem, right? Your business, your product or service is going to solve a problem. So do you see anything at the moment, and this might be a kind of loaded question, I'm not sure, but do you see anything where there's the problem that people are solving is very crowded? And then are there problems that nobody seems to be looking at that you see opportunities?
Yeah, I think, the topic du jour is digital health and online health, right? And so everyone has a startup in that right now because of COVID. However, I think there's a lot of kind of sectors within that are going fairly unaddressed. To me, mental health is a big one where technology needs to get more involved. There's several startups out there doing it. There's a few that are doing well and growing, but there's a lot of opportunity there. There's a billion marketing and sales enablement companies out there. Those are really difficult spaces to get into. And then, places I really like to look are kind of these like old laggard industries. So we just made a pretty large investment into a company in transportation and logistics. But then I also look into kind of like healthcare IT or fintech, right? Financial, because all those established businesses are extremely old. They're extremely people dependent. And any success represents a massive opportunity. So that's kind of where I look specifically. Those are pretty broad answers, and I'm happy to go deeper with someone kind of individually, but yeah.
All right. Yeah. I imagined that your answer was going to be fairly broad there,
Yeah.
Paul. So we've got a few minutes left. So if you have a question, or if there's any of, I see Steve Borgelt is here. Steve, if you wanted to take this opportunity to say hi or anything, then please do. We've got just a couple of minutes while we close up. So get in with your final questions.
Well, I don't really have a question, but I'll say hi to Paul. He's come a long way since Summer Welcome a few years ago.
It was only, what, 10 years ago?
I was going to say that's been quite a while, 10 years.
It was a decade. I'm old now, I guess. I will say, just anyone who wants to talk, feel free to reach out to me. My email is just paul@Allos Ventures. So pretty simple. Or I'm on LinkedIn.
So this is actually Dave Grant. Say, hi, Paul. It's been a while too. I remember when I think Steve and I did both this summer welcome in 2010 or whatever with you.
Yeah.
So good job. I guess I've got a question for you, because you're saying you were kind of designed to be an engineer, and we trained you to be engineers. But I was also somewhat, because I think I did, and Steve probably did, do evaluations at the end when you graduated. You did take a business combination industrial engineering class your last semester. Also, the lineage you came from, more or less, coming out of Dr. Viator's laboratory at the beginning, his lab was very translational. Even though didn't have the mindset back then, but how much did that, in kind of the back of the mind, actually kind of trigger your path?
Oh, I would say 100%. Dr. Viator, I just remember we called it the Viatron 3000. It was his laser detection system for circulating melanoma cells. That's what I worked on my first and second year. And the whole goal of that, right, to your point, was translational. It was to get it to market. I obviously didn't really see those aspects of it then. You know, to me, I was just working on this really cool device. That was huge. And then, yeah, that entrepreneurship course I took senior year was very eye-opening. And at about that same time, I became friends with a few of the business students who, at the time, I don't know if it's still there, the Student Center had like this space that business students could put a business into. And two of my friends had put a business in there. And so it definitely was interesting seeing, you know, the biological engineering department was, I would say, more so than the other engineering departments, kind of translational and looking towards bringing technologies to the market. So definitely.
Yeah. Well, thank you for that. That's great. I want to ask the academic questions, because we always want to make it better. And I know that, I guess that class, I mean, it was really cool to actually bring engineers in, because it was co-listed, if I remember correctly.
Yeah, it was.
And I just don't remember. It was like 4750 or something like that. It's a management class. So maybe, does that still exist?
I have no idea.
Okay.
I know they also had a fellowship at one point. I know Kyle Rude, who was in Viator's lab as well, did it. I think it was his graduate degree, where it was engineering, business, and med school teamed up, and they looked to solve problems within the hospital. To me, and this is something I've been pushing at the universities I'm kind of around now, is pushing more of these interdisciplinary teams to be working on projects together. Because when I look back at like the capstone I did with Dr. Borgelt, I know we did it with it was like a wheelchair company in town. And I'm like, man, just imagine if we had some business students on that as well, right? And so I think it gets interesting. I think there's more Mizzou could do there. And I think what they're doing right now is awesome. But building more of those interdisciplinary teams, I think, represents such a cool opportunity.
Yeah, actually, that was bio-design. I guess I'm proud that I was the executive one of the founders of that one when they started it.
Yeah.
I hate to tell you, it actually is no longer here.
What?
No, it took investments from all the deans of the 3 schools, and they did that. But it will come back, Paul. I guarantee you, because we've got Next Gen here now. If you don't know about our building, $240 million building that's going to be transitional for medicine. It will come back. I'm pretty sure it will come back. So that was a cool program, and I was very, very lucky to be picked in that space. And then John Viator actually was involved in it too.
Perfect. Yeah, I love Dr. Viator. That was great.
There you go. Thanks, David, and thanks, Steve. So I just want to finish up with Okay, firstly, students. So based on the conversation that just happened, you know, when you're looking for courses to do, look for ones that are open to all majors. Look for those opportunities to take courses that are interdisciplinary, where you're going to get to work alongside students that have different background, different perspectives. They see the world differently to you. You know, this is what we're hearing from Paul was a really good foundation for going forward, right? Now, Paul, what I want to just close off with is, so I don't want students to, you know, sometimes students, we bring in people like yourself, and some students might disassociate themselves and say, well, Paul, you know, you're an engineer, you're obviously really clever, you're cleverer than me, I couldn't do what you do, right?
Yeah.
Or they see, you know, entrepreneurs as you're a superhero or whatever. So do you have any, you know, advice for those students, or anything that, you know, little known fact about me, I wasn't a great student or whatever?
I would say talk to my wife. No, she'll put me in my place. I don't know. I probably wasn't the best of students. Dr. Borgel can probably respond to that. But to me, it's more just like, if you aren't doing something you love, you're kind of wasting your time, right? And if you're doing something you love and that you're passionate about, that's more than what most people are doing. And that's enough to kind of push you through it, right? Like I, to this day, constantly have imposter syndrome about like, crap, I don't know what that means. Like they just said something to me way over my pay grade. Don't know what this is. But it's just like, I know I can go look it up, right? And so to me, it's just love what you're doing and you can't really go wrong. And just be confident in yourself, right? Like most of the time, all I've seen, I now talk to people in all these different industries, like there's like the 10% level of confidence that's just know the lingo. And beyond that, everyone's just like a normal person, right? Like no one's like this hyper crazy, awesome human being. There's a reason why there's like 3 of them, right? There's like Elon Musk out there and like people like that. The majority of people aren't like that. So just find what you love to do, be passionate about it, and just go for it. And then at night, you know, just be like, have your little breakdown, get over it, say, no, actually I can do this, and then keep moving forward.
Great closing advice. Stay curious, right?
Right.
Go after things that you think look interesting. So thank you, Paul. Thank you everyone for tuning in. This has been great. Paul, yeah, and Paula, again, thank you for that question. Let's make a plan to do another one soon, with showcasing some women and people of color who have gone through the venture capital and describing their journey. Yeah,
and I can definitely bring a few of my friends on and we can talk about that. I think huge subject, needed subject, and there's a lot of good people out there.
Yeah, absolutely. So yeah, just to close off, unashamed plug for our next event, August the 5th, 7 p.m. We're going to have Mizzou entrepreneurs doing a webinar. So students at Mizzou talking about how they created a side hustle in college and all the resources that they used and reached out to and how they got that done. So hit me up and for details, but you'll see our advertising for that. Thanks everyone for joining. Thanks again, Paul. It's been great. Have a good rest of your day. And Ed, good luck for tomorrow with your pitch. Thank you.
Thanks, everyone.